Right, let's give you the markets update now. The JSE fell along with the global markets on Wednesday, with the rand extending losses after Fitch cut the long-term credit rating of the U.S. government. Fitch downgraded the U.S. to AA+ from AAA, citing fiscal deterioration over the next 3 years. Makwe Masilela is Chief Investment Officer and founder at Makwe Fund Managers. Well, let's talk to him now. But Masilela, thank you very much for your time. Let's begin with the local index and the rand severely under pressure today, continuing from yesterday's declines. What's causing this?
Just like the markets were just continuing from where we left yesterday, markets continue to be down. And remember, with the markets, you also have the Bank of England, which should be announcing their interest rates later today. And markets think that given that the inflation is slowing, probably the guys have a scope to scale down when it comes to the size, meaning they expect anything around 25 basis points instead of 0.5%. But yes, people continue to be worried, as much as we know that the downgrade yesterday, and saying, listen, it's not going to be as bad as it was before. Remember 2011 when S&P downgraded the US? The economy this time around is much stronger, and others feel that it's just too late. So we don't know whether we're in denial or so, but the US dollar continues to strengthen at the back of people are looking for safe haven. Hence, we see the likes of the rand continue to struggle.
Let's talk company news. Mondi grappling with the waning demand, customer destocking and falling prices amid the high input costs. Help us make sense of their results for the 6 months, which ended in June.
And as we've seen that the environment was not so easy for them, and we've seen that their overall financial performance, which is EBITDA, was down 28%, but the cash generation continues to be strong, up almost 8%. This whole thing is that the demand and prices have been declining, with the exception of container port prices. And if you look into their revenue just down 14%. As we said, cash generation up 7%, but their profits and earnings per share down 28%, but the guys managed to 80%.
The line to you, Mr. Masilela, not holding up so well. I'm going to try and attempt this next question. If it doesn't, then it will let us down. Let's talk unpacks headline earnings per share up by 33% for the period under review. Talk us through their numbers.
Remember, this is a company that was unbundled from Mondi in July 2011. And yes, the guys tried to do well. Managed to have a nice increase, which is EBITDA increasing by almost 37%. Reason being, we've seen when it comes to their plastic business, profits have improved. We've seen when it comes to their paper business, they've managed to get higher prices. And when you look into this whole performance, that the guys' revenue managed to be that decent in the sense that they managed to face revenue increasing by just over 13% or so, but the net finance cost were up 61%. Why? Because interest rates continue to go up, and also the fact that their net debt was increased by a whopping 13%. But as you said, their profits and earnings per share up nicely, 32.5%.
Let's conclude with this last question. I'm going to force it through. SAPI's third quarter results also out. How have they fared? And perhaps the question here is whether or not you are seeing a theme from these three companies we have just discussed.
Definitely there is a theme. It just tells you that our economy is not doing that great. Then the likes of packaging, there won't be demand. The likes of paper won't be there. Just looking at SAP itself, looking into their specialty paper and packaging, just have been under weak trading conditions because of high inventory levels. The graphic papers as well, not doing that great because of destocking as well, and also negative consumer sentiment. And the paper business, unfortunately, was affected by higher prices because consumers, what they did, and that was in anticipation of lower prices, they continue to reduce their inventory, and unfortunately that affected the demand. And yes, the guys, their profits and earnings per share are expected to go down by almost 80%.
Makwe Masilela, let me thank you very much for that market update, and let's apologize for the slight breakage in transmission. Well,